Hello and welcome back to Precise Algorithm Trading. It is Wednesday, April 12th, 2023, and I'm going to switch things up because this can get boring. And today wasn't really boring, it was actually a big down day in the way, just really in equity, but nothing to get excited about, and I'll explain that in a second. So, um, this is the Dow futures contract. I'm literally going to go backwards through stuff, or at least jumbled up. I usually start with the Russell, but this is the Dow, and it's been way back and forth all quarter. This is the quarterly contract, and it's aggravating to say the least. This is what it looks like on the 6-month contract, or 6-month when you put contracts together. For what it's worth, this is they they do what they call a continuous contract where they jam them together in trading platforms, and you can't trade the at YM. You can only trade the uh, the Dow futures, which is a quarterly contract. There's also micro futures now, which we don't get into, but um, these are literally, you got to change them every quarter. It'd be nice if you didn't have to do that, but it's just part of the way these things work. Um, but this is when you add them together. So you build your models off of the added together stuff, so you get as much data as you can, sort of, and then you add in some uh, some out of context data. There's a term for that, and you basically check your parameters versus the stuff that you're not checking against, just to open it up. And again, I'm fine and comfortable with this. It's all good, but it is aggravating. These are those times where you literally just have to sit through it, and it's either that or don't trade. This is the Russell, and it's took a big poop today, and that's again on the longer context. Yeah, I was really hoping it was going to bounce from this level, just because that's the old level it came from. And again, this is equity. It's not actually what the prices are doing. It's what's happening to your equity when the prices do what they do. So, this is the deepest pullback in the 6 months that you can see here, and it is fine. I mean, to me, it's fine, because if I open this to 12 months worth of data, or the most I can get, which might only be 9, it's still in context. I know what the math is behind it. It is what it is. And then you look at this. This is the NASDAQ, and it's closing the gap up to the highs. It was down here, and when that was frustrating as well. And it took one of these big hoops, just like the other one did, and now it's climbed out of that. And on the 6 months, this one looks fine, and actually, it's still my favorite. It's the most upward trending of all of them, and yeah, that's it. So that's what the automatic trading systems do. And right now and for the last, I don't know, month or two, it's been like, yeah, okay, that's great and everything. What really matters is when they all come together and you get you get good gains in 6 months on every platform, or every system. That's really what it boils down to. I have 3 of these systems going on purpose to have diversification. You might, especially, well, if you're starting out, you only start with one of them. And if it was me, I'd start with this one. So, all right, enough of that. And then the internals of the market. Let's do the actual market itself. So the market, it's going sideways, and some positions are really, they take this hard. I'm going to flip it to the actual, like, just the SPX, the Dow, and the Russell, because the other ones have overnight action in them. This is sideways too. This is the S&P 500. Bullish on the daily, still bullish on the weekly. It's a relatively big pullback candlestick today, and but in context, it's really sideways for going on a couple weeks now. We'll flip to the Dow. The Dow's actually been climbing, and it's probably, I mean, it pulled back a little bit today, it looks like, but in the scheme of things, this is quite a move off of, if we want to call that the bottom. It's probably not the bottom, but it's the most recent bottom, and that's bullish. The NASDAQ minus 102 points today. I mean, that looks terrible, and it turned red, and you know, it's kind of a heads up, but the true moment indicators are fine on both time frames. So what do we really have here? Potentially we could get buildup in this area, which is sideways action before we get a breakout to the upside, unless we get like downward, you know, we get sell signals and so forth. But we can still have target dots to the upside. Guys, this is how markets work. They'll make you just, they go back and forth, and eventually they have breakouts and trends like we did back here in early January. That's a breakout, and it created a pretty strong trend for about a month or so. This recent trend breakout has been going on for another month, and if this is the end of it, we'll find out pretty soon. But yeah, that's how markets work. So here's the Russell, which it flattened by now. It's after 8 o'clock Eastern Standard. We got red candle, but really the most recent action is a buy signal on the true Momo indicator. We got sell indication now on the weekly. If this thing's going to fail, it's going to fail soon, and it's going to fail down here. But we do have a lot of, you know, relatively decent support from even the previous where it launched. So that's really what this indication is down here. I don't draw these in, they come in automatic, which is pretty cool. So they're showing us the most recent high and the most recent low, and kind of the area where you'd expect prices to potentially turn or consolidate. So, all right, let's go to oil, because, well, it's still actually, I think, breaking out, which is why I got out of my short play yesterday. Come on, it's going to give me a technical difficulties. I can almost tell you it's going to happen. Yep, there it is. So we got the breakout, we got a little bit of a slight pullback, and then we got a breakout higher. So oil is breaking higher. What do you do with it? This is the Harvard indicator that we created here. It's really what's got to happen is the price on oil would have to close above the golden line for the month, which we've got you know, better than half of the month left. It has to close up above that before I would consider this to be a broken downtrend and a longer term potential uptrend. Not that it can't happen, because we got target dots on the weekly that potentially are showing us that. We got a green bar on the weekly the last 2 weeks. So and if you actually look at this, when it turned green, that would have been a nice buy all the way up. I shorted up at the top thinking that we were going to get a deeper pullback, and I just got out with a small loss, and that's the name of trading too. That's how it works. So then we go to stockcharts.com, and we look at the internals. Bullish percent indexes. The NYA, these are wild today because they all went up. I did look at them midday. The industrials went up quite a bit. I mean, tacked on 2 X's. So the internals are starting to show some pretty bullish movement while the regular markets are going sideways to down, which is probably just enough to frustrate. I know it's frustrating to me, and I kind of understand it. Can't control it. All I can do is control myself in the market. But I mean, look at that. That's the SPX tacked on 2 X's today. The NDX, the NASDAQ 100, popped on 4.92% today. We talked about this. It's going to take a big move for this thing to put in a new column of X's. Well, it looks like it's getting there. I mean, it's not going to do it usually in one day. And then the OEX is the S&P 100, and it's tacked on an X. So all these tacked on bullish X's today, for the most part. We still don't have confirmation in a bullish column of X's on the NASDAQ itself, which I think is really the thing that's like hindering anything right now. If we get that up and going, which let's go back and look at the NASDAQ and what it looks like again. It's that breakout. So this is what could happen. Come on, technology. Oh yeah, the NASDAQ already broke out. Sorry about that. Broke out to the upside on the futures, and it's pulled back. So we have a relatively clear uptrend on the NASDAQ, unless this thing decides to fail right here at this level and pull back even harder. And then basically what do? We get a sell indicator on the daily, which we decide we're either going to sit through or get out until we get a new buy indicator on the daily. And in the meantime, the weekly is still up. So really, what do I expect? If those buy signals, those bullish signals on the bullish percent indexes actually play out, then the NASDAQ, it looks like a bunch of people could get short and then get just pulled underwater while this thing like takes off nicely higher. And I already have levels drawn on this thing where I expect to be able to get back up to, on the left hand side here where it says 100%. And there's even another level that's probably off of this chart that I'll leave you guys with, 1272, which happens to be also at that old resistance level. So I'm not saying it's going to happen. I'm just saying the likelihood is, and by the way, that was the target that we drew in. It's been a few weeks ago. I would say the likelihood and the odds are in our favor to still get this thing going higher. So I'll leave you with that. Have a great tomorrow. Have a great Thursday, and we'll talk to you tomorrow night.